Just a couple of thoughts before the next week starts, and who knows what it brings. I don't want to give a prediction if it's going to be a red or a green week, but what's interesting here, and I just tweeted that one out, I made an update on the open short position for NIO. I've done this once before, like on the 18th of July. Back then I said like a record amount of 116 million shares has piled up in short against NIO. So that's reflecting roughly 1.2 billion betting against the company. There have never been more shares short the company, maybe mostly in the share count, the amount, and that's not counting for naked shorts anyways, and not for a puts position, right? Now I just looked at the numbers again, is there a new number out? And yeah, there is an update to it. And funnily, that's a little bit against my expectations. It's still 104 million shares that are short the stock. And now at current stock price, that's worth 1.5 billion because, of course, the share price is up. And that means that during this whole run from the end of July, where was it? No, the end of June. The end of June. So around $9.50 up to here, $15.70. Shorts only covered around 10% of their short position. And that's interesting because that's not a whole lot. But on the other hand, I also have to say, like, there's about 7% of the float, I think, short NIO currently, and that's also not a super big amount, so I wouldn't hype this up in terms of saying, look, this is going to be a short squeeze, or, the shorts are trapped. But, well, in a way, it's getting more expensive now to cover for the outstanding short position, right? So the question here is, what is their break-even point? Or what do they target? The fact that they didn't cover a whole lot of their short position yet means that they still think that the stock price will be heading downhill from here, because otherwise they possibly would have covered it already, or more of it, right? That's the rationale behind it. And so it's interesting. So I would love to see, like, what is the average cost at which they have shorted the stock, because that's the thing with shorting, right? It's open-end. It's they can, if they decide to not cover the stock, then this can be getting very much expensive. Like if we should go up the way to 20 and so on, it's suddenly becoming not 1.5 billion, but maybe at some point 3 billion to buy back the shares, theoretically. But seems that the target, the strategy for them here is to hold out a little bit and cover them at some point later. Who knows, maybe we get a nice drawdown in the stock, maybe this week, who knows, maybe next week. And then they might have better chances at covering more, or maybe they are even, in there for the long run and think that this company might go bankrupt, or, anything else happens. But still, I found this quite an interesting update here. I would have expected with such a large run that this was driven a little bit more by short covering, but as it seems, as it stands now, and by the way, this is end of July data, so this is only, what is it, 12 million shares covered. Not a lot. Something to think about before we start the next week. Thanks for watching and have a good one.